Friends, the topic of today's podcast is about turn. The markets were making an endless plunge into negativity. It was very evident in several social media groups where people were spewing negativity. While one has seen such negativity in past cycles and kind of ignored them to do one's own investment decisions and calmly going about what one needs to do, this time was different. The reason is that investors are increasingly becoming intolerant to adversity. And that intolerance is basically manifesting in making more people intolerant, and it's kind of going viral. While it's everybody's right to do that, such behavior really does not do any good to an investor in the long run. Our basic faith in the economy, the ability of our country to grow, the ability of our corporations to improve their governance, the scope to deliver performance in businesses, the prospect of such performance reflecting in wealth creation of companies, our ability to participate in that wealth creation, these are things that have been proven across market cycles. Yet, one found that in this current downturn, our ability to defeat ourselves, to lose the battle in our own head, outdid itself, and this was indeed a peak in such behavior. There is a lesson, and that lesson is that negativity can turn when you least expect it to. So when you see negativity of the kind that we saw in the recent weeks, one should remain steadfast to one's investment conviction, beliefs, and direction. And those who remained are definitely going to do better than those who got carried away. It's not as if all the economic problems have receded, but one can say with a degree of certainty that we have made an about turn, a U-turn where we can only go up from here. The way in which government has delivered this U-turn is very interesting. First, interest rates were reduced, liquidity was increased, transmission of lower rates was emphasized, the NPAs of MSMEs were given more time, and today the direct tax rates for companies was reduced. Importantly, going forward, companies which are going to be started from here on are going to enjoy a significantly lower income tax rate of 15%. Existing companies will see their tax rates drop from as high as 34.9% to 25.1%. This can potentially create a significant investment boom. And that essentially is what the stock market celebrated. While these celebrations will end and markets will definitely return to a new level and find its own equilibrium, sentiment can potentially get better. So, those who got carried away by the negativity in the past should walk back and try and be more objective. After all, the benefits of better objectivity in investing is going to reach only you. And so, it is the responsibility of every investor to ensure that he instills enough objectivity in his investing. While politics is important to investing, it is not everything to investing. Policy is something that can make a much more deeper, long-ranging impact. Remember that the investors who made the most money in the last 6 years or 7 years were those who showed high conviction and faith in equity investing during those troubled times of 1213. The present is definitely not as complex, not as scary, or not as intimidating as 1213, and the future looks bright, promising, and rewarding. Happy investing, stay invested.